Welcome back, everybody. I played the pulsex intro. I probably should have played the HEX intro because this is more of a HEX related content stream. I'm here with Dipcatcher, longtime community developer and member, also known as Tanto Nomini, which actually means without a name. So I'll just call you Dipcatcher, whatever you want. A lot of people might not know who you are. You've been around for a long time, man, and you've built a lot of really cool stuff in the past. I think you should give a little background on like what you've done for the community so far.
Yeah, no problem. Thanks for having me on. I've been a web developer for a couple of years now, just building early stage startups, started out in, some of my own startups. And then I was working at a legal startup. So I've kind of been, at the very early stages of startups. And so I've kind of tried to bring a lot of what I do, professionally into HEX. And so I've built tools like HEX.cash, which is just like kind of like a trading terminal for HEX. Built like the MaxLink stake bot. So that's a bot that tweets out every time there's a MaxLink stake. It's down now because I'm changing over to a less expensive tool, but things like that.
What's the tool?
Calling the Twitter API directly.
Oh,
yeah. And so
nice.
Yeah. So I don't need to pay $600 for Zapier to do that.
Yeah.
And so, just building tools like that. I have like an email alert called Dipcatcher, and anytime there's a dip in the HEX price that fits certain statistical criteria, it'll send out an email and give some price targets. And generally, what I try to do, and the way I try to contribute to HEX is just try to build out tools that assist the investor experience. Because these assets are like they're because they're speculative, and speculation is what drives them. The better that we can build out kind of like the surrounding like investment tooling, I think that the larger and larger audiences that we can attract into the HEX economy. So that's kind of what I really try to contribute, alongside with like analysis and breaking down topics and entertainment. I try to do it all for you guys.
Well, the amount you've given away for free is absolutely insane, and continuing to give out just for free. So for those that don't know, HEX.cash, is it HEX.cash? Mm-hmm. That's a trading terminal. What that means is basically just more redundancy for a UI, user interface for the Uniswap front end. So, if ETHEX.com went offline, you could always go revert back to HEX.cash. The MaxLink stake bot is super bullish. Follow it on Twitter. Just tells you whenever people are staking for 5 days. And then didn't you make a Dipcatcher bot as well? It's almost like you could potentially use it for swing trading if you wanted to buy the dips and sell the highs, but it's also just a great way to dollar cost average in. Is it a bot or like what is it?
It's like on TradingView there are those like algorithms and strategies that you can create with like it's called PineScript is like the scripting language,
right? And
so I have a Dipcatcher, like the one that's on my chart. I haven't figured out I have to like upgrade my account to publish the script. So I just haven't done that yet, but yeah, it's like kind of like a trading out, not so much a trading algorithm because it only tells you when to buy, like when to sell is like, that's like a personal, you have to look within for that answer and only it for yourself. And so it, but telling you when to buy, that's like, you can, do some math and, give yourself a good idea of when to buy something. And so that's kind of, it's like a buy only signal. And it's like a dollar cost average, and it also just kind of like when you look at the frequency of how they go out and like the kind of like cycles that they go out in, it just kind of helps you identify like, over the course of a couple weeks, kind of, where like a local bottom might be. So it's pretty useful just in like tracking the HEX price.
Is that dipcatcher.com?
Yeah. So dipcatcher.com is, I don't think it like, so that algorithm is what drives the email alerts. So when that email goes out, it's because the algorithm's triggering by either on like I think it goes like 6 hour chart, daily chart, and weekly chart, which, 6 hour chart that goes out like during a downtrend, that thing's going off all day for days on end. Some people get annoyed with it. And then the weekly chart, that's like way less sensitive, like way more conservative. And I don't even know if that's ever gone off. But then the daily one that goes off, it hadn't gone off from like October of 2020 all the way through something like September of 2021. Like as soon or no, maybe even after that. Like no, it went off during the Pulse sacrifice, that like big run up. 30-day 80% bear market we had.
Yeah.
It went off there too. So like, that one goes off more regularly, but sometimes it'll be months on end without any signal. So, it's not too smart, but it just, when certain criteria is hit, it'll tell you.
Well, when it's right, it's right. You got to be patient with that kind of thing. But yeah,
when you backtrack it, like, and benchmark the performance, like buying that, it's like, it is a really powerful dollar cost averaging tool.
I mean, even on the website, you've got some little thing that says, if you follow Dipcatcher alerts for your buy signals, you would have X multiple on your money.
Yeah, and that's only on the Bitcoin one. The Bitcoin,
oh.
I made that before HEX existed. I made it for Bitcoin.
Cool.
And so that's so I haven't worked on that in a long time. So I haven't made the HEX one benchmark the perform, but even the Bitcoin one, you perform well. Like,
it's awesome. And I remember PineSquared, man. I remember making a bunch of failing indicators because I thought I was going to be a trader and stuff. But the Dipcatcher bot seems to be better than anything I've ever tried to make before. I just want to say what's up to the chat really quick. What's up, Red Squirrel, Gold Key, Dipcatcher's partner in crime, the Mango Junkie, Sandy B, hello, Sand Kelp, hello, Hexa, what's up, bro? Hexhodl, and Antonio Miranda wants me to ask you about the Undertaker's Hall of Fame speech in WrestleMania. You know anything about this?
I know nothing about that, but I'd like to now.
All right. Well, that's weird.
That's funny. It was so memorable that I cannot remember it.
Yeah. Wow. Well, guys, I mean, I'm just trying to establish the rapport, like for you guys to get to know and trust Dipcatcher here. He's been around for a while. He's been a HEX holder, staker, long-term community member, and now he's released something pretty awesome that I think you're going to want to know about, especially if you're newer and maybe a smaller holder of HEX. This could be a way to get instant liquidity, basically the ability to cash out, instantly if you need to, while also utilizing the bigger pays better bonus that HEX has that not a lot of people can really utilize to its full potential today, because it's really a whale. It's really off limits to whales. Why don't you explain a little bit about like what bigger pays better is?
Yeah. So the way bigger pays better works is it allows you to get more T-shares per HEX that you staked based on how much HEX you're staking at a time. And so like when you look at go.hex.com, when you're like setting your stakes, it shows a couple of figures. There's like the effective T-shares from your longer pays better bonus and your effective T-shares from your bigger pays better, or the effective HEX. And so the more you stake, the larger, the more T-shares you get. And so what that means is the more earnings per HEX staked. So in Maximus, since rather than everybody staking on their own, there's a single giant stake held in the Maximus treasury, then everyone who's staking is contributing to getting, working up to that maximum of like 10% increased earning potential of your HEX by pooling the HEX together and then, working towards it together, because you on your own wouldn't have, reached the percent that you would have had in the pool.
Yeah. Yeah. So for example,
sorry, go on.
If you're new to HEX, like if you don't know about like the staking functionality yet, there's longer pays better and bigger pays better. Anybody can do longer pays better. You just, that basically gets you more shares and more returns for staking longer. Simple, right? But for bigger pays better, not a lot of us can afford, myself included, the amount of HEX that it takes to really squeeze the most juice out of that bigger pays better bonus. And it's capped off at 150 million HEX. And I don't know about you, but I don't have 150 million HEX. I couldn't do it if I tried. That's a lot of money today. That's like millions of dollars.
But what's interesting about it is that in Maximus, the bigger pays better bonus is actually like a very small portion of the total value gained by staking through this pool. Because if like the difference in like your earning potential from like say Maximus only had like 150,000 HEX pool, like a very small pool, versus 150 million where you're maxing that out, the actual like earning like potential increase that 10% gives you, it's actually only about 3%, because the longer pays better grows it by 200%. And so like there's now like a 300% pool and then now you add an extra 10% to that, and so that 10% of the 300%, that's, it's actually a very small, like,
wow.
so there is the benefit of doing that, but it's like effectively, like from the user's experience, like the smallest of holder, gains like maybe a little more than 3%, and actually the biggest holder actually gains maybe less than 3%, because so that it all averages out to that like 3% gain, because the minting of Maximus goes 1 hex per maxi. It's not based on the shares that are generated from your hex. It's like 1 maxi in, or 1 hex in, 1 maxi out. It's almost as if the larger players almost like share their contribution towards that bonus with the smaller ones. And so there's kind of some game theory there where like the smallest of users really get the boost, and the larger users, they may lose some of their bigger pays better, but to them the ability to earn yield in both Maximus and Hex probably far exceeds that that tiny amount that they may be they may be kind of like giving away, to the smaller stakers in the pool, which is fine. Many people are generous, like it's like that ethos of like leaving meat on the bone and like doing things that contribute to the experience that like, kind of like the masses have. Like Hex is so popular because everyone's had a great experience with it. And so if like, so like from the larger person's perspective,
well, everyone
like,
except for people in the past 6 months, but
but even some of them are having a good time, or they're trying, so like it's, but in general, like, most people have had a great experience. And, so for a larger players perspective, they can probably tolerate sharing some of their T-shares that they're producing with, with that cohort, because one, just the other benefits they get from being part of the pool. And then two, like, the more people that have a good time from it, the more people are going to be talking about it. Maybe those Maximus will command a premium at someday. And so it's kind of, that's kind of how I view that like how the bigger pays better bonus works out. But well,
there's so much to talk about that you just covered, like the premium deficit, like that could be a whole side game. But I think I crunched some basic numbers, right? And it was like, if you're getting a roughly like a 4.9 or 4.8x just from the bigger pays better bonus alone, if you were able to stake 150 million hex, which nobody really can alone these days, but pool together, let's say we get up to 150 million hex, and this, we pool in the 30-day window a giant stake. It's almost as if you're getting an extra almost 5x out of the returns by the end of that stake, just due to bigger pays better, not even longer pays better. So I don't know if that's exactly right, but it was kind of a rough estimate. But here's how it's going to work, guys. I mean, number one, it's been audited. I think the audit came back successful, so congrats. We like audited stuff. No middlemen, no admin keys, all that stuff. Like, nobody can turn this off. It's a very, I don't want to say simple smart contract, but it does one thing, and it does it very well. So
it is very simple. And that was like the whole design criteria of it. Like that was like a main drive, because there's all this wacky stuff we could have built, different fundamentals or different, dynamics to the launch, or, all these things. But like the more intuitive, because like, people, it's like they learn about Maximus and then literally can click within 10 seconds. And then like, there's no downside to it. And so like, there's really been no opposition. And most people, once they learn about it, they do, just recognize it as like a simple thing that fits in line. Like if you come to Hex because you're into no admin keys, trustless, like true unstoppable DeFi, where, you could run your own front end, like independent of everything, or you could call the contract directly, and like, where it's not relying on like, like anything. It's like, it just runs, so long as people continue to run the functions. Like if that's what you like about Hex, like all those same principles are carried into Maximus. So Maximus is truly like an extension upon Hex, one, because it's like the underlying asset behind the Maximus treasury, but two, all of like those same like values and principles, that I think make Hex really strong. Maximus carries those forward as well.
It's if you like, it's what crypto is supposed to be, right? Smart contracts were supposed to be immutable. Hardly anybody ever actually does it in reality, because they want a delete button, right? They want an edit function, and when you make a smart contract, and if you really want the censorship resistance, you need to make sure it's set in stone. Like that's half of like, it's just that we've become so accustomed in the real world to, you know, being able to make up for our mistakes where, you know, people don't want to spend the time up front to make something perfect anymore. So this is crypto done right. And how it's going to happen, how it's going to work is there's going to be a 30-day window where anybody can pool in as much.
Okay, should I correct that? We've actually shortened it to 15 days, and I don't think we've updated our website. We haven't pushed the new site yet. So
yeah, actually, I'll let you cover that then. That's interesting.
Okay.
How's it going to work?
Yeah, so we just decided to shorten it from what originally the idea was a 30-day mint phase. We're actually just going to shorten it to 15. One, to maximize the hedge bonus, which I'll touch on in a minute, and two, just to try to increase the chances that we complete the whole minting phase on PulseChain. There's no difference between if it starts and then PulseChain happens or not. The only difference is that it would produce really clean charts on the EMAXI PMAXI pair if it started at parity. So if the supply was at parity. So that's you know, but anyways, there's a 15-day mint sequence where you interact with the smart contract, and that interaction, what it does is it sends however many hex from your address to the Maximus contract address, and then it mints you one maxi per hex that you contributed. And so it's just like a simple in real time sync, you know, very gas inexpensive minting where you just go 1-to-1, like there's no calculate, it's literally just 1-to-1 minting. And then so that goes on for 15 days. During that 15 days, you can actually redeem your hex 1-to-1. Like if you get cold feet, like if you
mess it up, if you regret it.
Yeah, if you regret it, and you know, so you know that because during that minting phase, like that 1-to-1 redemption is both ways. Because like, and then, but once the stake starts, so after the minting phase is done, then someone can run the stake start function on behalf of the Maximus contract, and then that takes 100% of the maxi of the hex in the contract address, and then stakes it for 15 years, 5555 stake start, and then from there, during that time, there's no redemption window because there's no hex to be redeemed. You know, there's nothing in the treasury, and so then, you know, so during that time, it's just like the Maxi token is fully liquid, fully transferable, ERC20 standard, no, you know, nothing strange about it. It's just a normal token. And there's no more supply. So once that 15-day period is done, no more supply. The only Maxi that gets minted is that which is minted through a hex deposit. So at the stake start, the number of Maxi will equal the hex principal. You know, so no pre-mine, you know, and you know, no contract fee, you know, no nothing like that. And so, you know, then after the stake ends, the contract measures how much hex it now has as a result of the stake, and it measures all of the hedgerin that the stake earned during that time. You know, because you can run the mint, anyone can run the mint native function on behalf of the Maximus contract and generate the hedgerin. So at the end of the stake, now the treasury contains the hex principal plus the hex interest plus the hedgerin yield, and then all of that is divided equally amongst all of the Maxi holders. So you know, so your Maxi at the end is redeemable for its pro rata portion of the Maximus treasury.
Right. Meaning that basically when that 15 years finally comes out, you're getting all that longer pays better bonus, all that bigger pays better bonus, all the price appreciation, again, all that interest, and then all of the mintable hedron as well, proportional to how much Maxi you have compared to everyone else. Dr. JT James wants to know, is this all on PulseChain? I believe the answer is no. It'll be live on Ethereum very soon, and then it'll be copied over to PulseChain. So 2 coins are better than 1, and I like that you guys are releasing as soon as you can, because it'll just be nice for everybody that does want to participate in this kind of side game to basically have a double copy. So it will be, to answer that.
Yeah,
but not.
yeah. The copy I think is great, and then having like one Maxi per, or one EMAXI per PMAXI, that's just like very clean, and like, because what you'll see there, it'll be really interesting because like the Maxi is backed by both the hex and the hedgerin and it's backed by, its future earnings, because those earnings are, something is going to be there, but you don't know what it is until each day. So like every day that goes by, it becomes more and more certain how much HEX is actually going to be there at the end. Early on, there's a lot of uncertainty because it's all based on future actions. But every day that goes on, there's one less day that you're uncertain about. And so it becomes more and more certain, so like you'll see how the market values, it's like a way for like the PMAXI to EMAXI chart. That'll show how the market is measuring staked HEX in the max length on both chains, whereas the EMAXI PMAXI one is how the market is valuing liquid HEX. And so now there's like kind of two different price ratios to look at on both ends of the spectrum. One is like the most saleable HEX, the most liquid HEX versus the least liquid HEX. And so there's going to be two kind of, the EHEX PHEX price chart and then the EMAXI PMAXI price chart. Those will probably move together, but they'll have certain variations, and those variations will be the market expressing what it believes about like the value of staked HEX on, from one chain to the other versus liquid HEX on one chain to the other. So that's why I would like the pair, just because it'll make it very easy to like intuitively understand. But the math will work regardless of if like the PulseChain one starts, midway through, and then there's like, not the same number of units minted on each side.
Dude, that's awesome. I hadn't thought about that. And I would almost predict that people won't value staked HEX as much in the early days, especially because number one, 15 years seems like such a long time to people that most of them can't fathom, how much that stake will be worth when it comes out. But number two is that, when we're in this bear market like we are today, I think sentiment is generally down. So it might almost provide an amplification effect of, a deficit when HEX prices are down, and then a premium when there's optimism in the environment again, and people are, scratching and clawing to buy HEX, which, it'll happen again. I mean, when the next cycle repeats itself, but then they almost might look at, staked HEX as if it's more valuable because of just, the general sentiment. And but you would roughly expect the price of one Maxi to equal the price of HEX plus interest earned plus Hedron. Like one Maxi will equal one Hedron plus one HEX plus any interest on that staked HEX. Roughly,
yeah.
Right?
So can I share my screen so I can just show our website? There's a
I was gonna
graphic.
pull that up too. Yeah, but here, I'll let you do it.
I'll share let me pull up just this tab. Okay.
Yeah, I love this graph right here, guys. Check this out. If you're just listening, you might want to just watch for a little bit. This is a really good infographic here.
I should have explained this while I was going over it.
Yeah.
Okay.
Right.
So there's minting redemption. So like nobody knows what how the market will value this, because like there's like just like the underlying treasury value, and then like what the market measures that at is completely different, because the people in the market, there's a whole lot of things that go into the activity of those buyers and sellers. Like one, it's like, how much in profit are the Maxi minters from their HEX alone that they're minting? Maybe they bought their HEX 2 years ago. It's like their HEX is up massively, and then their Maxi will be, because it's just like earning more, that may grow. And so those people may be totally tolerant at selling at a discount. So like, they're like these waves of sellers, they could be selling because they've just made so much money. They could be selling because they really need cash. They could be selling, even at a discount to the underlying value. Maybe if they even think the discount's going to be deeper. It's kind of like in the real world, there's like negative interest rate bonds that people buy because they're like, oh, this is going to be even more negative later. And so it's kind of like, so there's like a whole lot of reasons that people may be selling this, but also the things that make people either not sell or make people want to buy is they're looking, they can be like baking in like the future earnings, where like where you may be okay, like maybe early on paying a premium for your Maxi because you think that it's going up here, because which, you may have a good reason to believe that. I mean, there's a very good reason to believe that there's going to be more HEX in there, because there is. And so like people may be willing to pay a premium to the treasury value because they're thinking about their gain, in total, and maybe they missed the minting, or maybe they didn't have liquid HEX for the minting and they just want to lock it in. And then from, from their perspective, all that is like, okay, like they could just like flip their perspective and say, okay, like I paid a premium here, but that lost hex that I had, that difference in the hex I could have had by minting versus paying a premium here, whatever. That's just like, okay, I didn't have a 15-year stake. I had a 13-year stake, and those 2 years of lost earnings may equal that. So like, there's a lot of ways people can rationalize, like, potentially paying a premium, especially early on. I think later on, because around this time, in 14 years from now, it's like we know exactly how much is in the underlying treasury. We know, and there's only 100 days, and it really takes a long time for like the daily payout per t-shirt to change dramatically.
Yeah. And
so you can like expect the next 100 days is going to be a lot like the last 300 days. And so so then it maybe this like premium discount cycle may kind of squeeze to where at the end, like this redemption value, like because it's like one way redeemable, like someone like it wouldn't make sense for someone to sell at a discount because they could just redeem for that amount of hex. And it doesn't make, maybe it makes, and it doesn't really make much sense to like buy at a premium because you could just hold your hex and you'd have more. And so
if you are a long-term believer in, well, if you do want to maximize, the bonuses and interest from a hex stake, you might play the long-term game in Maxi of trying to scoop up every discount over time. But what you're saying is as we get closer and more certainty to that 15-year mark, there's less volatility in the discount premium pricing of it. And I want to call out, I know everyone's tired of sacrifices. I totally get it. I want to be clear that this is not quite a sacrifice phase. What this is just a totally optional smart contract. You don't have to use it. I mean, it really is basically a coupon that lets you redeem in 15 years a totally maxed out hex that was staked with totally maxed out bonuses. So you cannot get any higher bonuses than maximum length and 150 million to go maximum size. And the one Maxi token will essentially give you redemption rights to one hex plus the amount of hedron that it can mint plus all the yield that it got from those maxed out bonuses that you probably could not have done alone. And it's also what I wanted to point out that we've been talking about is it's a side game that increases speculative stickiness for people that want to try to trade or just feel like they have to do something. I know I preach that often, holding is really just the best option. It's the boring advice that nobody wants to hear. But if you do want to play in a side game, you can maybe try to trade the premiums and discounts in this Maxi pool, because once it's all minted, no more can ever be minted after that 15 days. And you can try to time the market if you want. I'm not recommending that. You're probably going to end up losing all your money. But if you must, there's this new world out here that's basically a derivative product that tracks the underlying price of hex plus all the future potential from maxed out bonuses.
Mm-hmm. Yeah. And to really emphasize what you said about like no sacrifice, it's by no means a sacrifice because you get your coins back. Like there's no, it's truly like you're just converting your hex into Maxi, and there's the security audit that you can like lean into, but also the code is simple enough to where you could read it and really understand. It's like written in plain, very, very clear what's happening, only a few steps per action. And so, you can feel that confidence that like you are going to be able to redeem it. And so it's not, like it's no sacrifice. And that's, what was really, really important in the design of it.
Yeah. And again, guys, for anyone in the chat that's wondering or you're on the fence about it, you need to decide for yourself if you want to participate in this or not. I think it's cool because I think it gives you a redemption right to, because I think there's no other way to maximize your bonuses in hex, especially bigger pays better, other than doing a trustless pool like this one. And this is truly trustless, meaning no admin keys and all that. It's done the right way. And honestly, I'm surprised someone hadn't done it earlier. It's funny, exactly a year ago, me and Dipcatcher, we had a different live stream when we were much more noobish, and we were just like talking about, wouldn't it be cool if this happened? And then so I guess you just decided to take things into your own hands, and you're like, well, no one else is doing it, so I guess I will.
Yeah, I mean, it's because at that time, like, you know, because we had heard that some of the staker app people had been working on a contract that could enable that. That one had a different, it wasn't like pooling, but it was just like minting it and holding it. It's kind of like as if you were in your own contract, and then you could like set a price that someone could fill and they could like take possession of it. So I think it actually had kind of like an exchange mechanism built in. But then I never tried that. And I tried to read the code. That was before I knew any Solidity, so I didn't really know what I was looking at. And so I just assumed that it would kind of roll out as like a part of staker app, which it should. Like in general, like this concept should be rolled out far and wide. And so that's what that was like the first time I'd seen someone try. But also there was like kind of those like games that people would play in the early days where I think it had kind of like a pooled stake element, but that had like entrance fees, exit fees. You may know more about those than I. So
that was called like what do you call those? Not a reloading scheme. It was hourglass game. Yeah.
So there was those. I think that is some type of like stake pooling, and maybe people have tried it. We've also seen a lot of like offline pooling. So like people pooling for the sacrifices, like purely on goodwill and social trust. Which is strong. And also it really shows that like there is a pretty high tolerance to trust in pooling, like, in general, like, so we kind of go above and beyond with the full trustlessness, but like there truly is, like, honestly, people would have done this if there was like an admin key, maybe not as many, but people certainly would have. And so, but in general, it's more for, like it's better for everybody if there's not, but
that's
like the first version of this almost was like very trustful. Like I had a prototype in like December that it was through this tool called Aragon DAO. It was like a formal DAO, and I chose it because you could call the stake start function on behalf of the DAO, and it'd go up for a vote, and then you could like, But one, it like for the minting, it certainly required a lot of trust. You couldn't do HEX. You had to mint with DAI. Like you could only raise DAI, which sucked, and then you'd have to like execute a purchase, and there could be all this like kind of the same challenges they were trying to overcome with like the pulsex auto buy and burn that you covered in your video, like where that's kind of a challenging thing because like for the order execution you need like a real-time real-time person, or a real-time signature, where so like with the Aragon DAO, it's like you have to like schedule these transactions like weeks in advance. So like it would just been really hard to get the HEX, and so there were all these problems with like how it could like do the pooling and like the minting of the redeemable coin. And so that was the original attempt, and that would have been very trustful, and it would have been a headache. And so
but often the best solutions are the most simple and elegant in the end. And I think this is a great one. But I do want to refer to that. We got a couple of really good questions in the chat. I want to respond to them. Liberty Capital asks, the Maxi coin is liquid. Yeah, it is liquid as soon as you get it. But you cannot exchange it back to HEX anytime. You can only exchange it back to HEX at the end of the 5555 stake. Is that correct?
Well, so you can. There's two different words to use in this case. You can redeem it back for your HEX at the end of the stake, or you can exchange it into HEX or USDC or ETH or any other coin on a decentralized exchange through a.
Now that'll be cool to see the ratio of the liquidity pair in Max Hexy, because you can literally use that ratio as like the interpreted future value.
Exactly, and because it's so that's the main value proposition. So there's kind of like three main ones. We touched on the bigger pays better. That I would put in third place of the value propositions.
Really?
Yeah, for sure. The tied for first. But because one, there's uncertainty and actually the actual impact, maybe that goes second. The second is gas savings. Every day, like every MaxLink stake, if you use the hexnoob.com stake calculator, every MaxLink stake is probably going to cost at least 1 ETH of gas to end, depending on the gas price. And the no expectation of profit from the work of others, I extend that to where I have no expectation that anybody on earth is going to do work that's going to cause the gas on high demand blockchains to go down. Like I only expect gas prices to go up, because why wouldn't they? And so
I love it, because the price, it's so tied to the price of the underlying network token.
It's tied to that, and it's like that's like the baseline is like what's the underlying gas unit paid in. And then on top of that, there's just like just like the general activity of just like normal transfers,
Right.
you know, and then there's the layer of trading, you know, and so like the
And then
higher
there's the
you
NFT
go,
layer.
yeah,
That
exactly. Like
fucks everything up.
so use cases where there's super high priority transactions in large amounts, where like the big whales are like fighting for that trade. You know, only one person's going to fill that wick, you know, and they're fighting for that, and so they're willing to pay people's mortgage
They'll
payments
fill up a
or
whole
higher.
block.
Yeah, they'll fill up a block to prevent their rival from getting that transaction.
Wow.
Same with it, you know, NFT trades. So like that's like the top layer, which like, you know, because usually when people post the screenshots of like absurdly high gas, if you look 1 minute later, it's back to still high, but not like the thousands of GWay. So like, you know, so like that's like the top like amplifier of it. And with all the max length hex stakes that are ending in 15 years, each at current gas like block size limits, each a single block may only be able to hold like 5 max length stakes ending. And so usually there's about like 30 to 50 max length stakes made per day. And then since Hedron launched, that number's grown to between like 100 and some days it's like 200. So like every day there's a ton of people max length staking. And so at the end of that, there's going to be all these not so high priority, because you can wait and then, you know, it kind of bleeds out over 2 years. So like, you know, it's not that high priority. So like, there's not that like extra, like you don't need to be I mean, I don't know, maybe there is, like you want to be the first one to end your max length stake before all these other people. So maybe that there is really high priority on those. And so since all those end stakes are going to be filling up these blocks and then competing with each other to get out, you know, to end theirs first and mint their hex, that could drive the massive gas prices pretty much starting in like 15. So like day 5555 of hex, you know, right now, like, you know, that would be like 6,100 or something. But like starting in like 13 years, the hexagons may be flooding the blocks because of those stakes. And the longer the stake is, the more gas it consumes and the more it costs. And so there could be just the hexagons could be driving the gas price up, you know. And so, you know, I say this in the frame of Ethereum, but it also applies to PulseChain, because, you know, in PulseChain, if you expect 100,000x price performance, that's at least 100,000x gas cost. And PulseChain, it's, you know, it increases the throughput by like an order of 4. So maybe, you know, with 4 times Ethereum's capacity, you know, so 4 times Ethereum's like high priority use, you know, that's what it would take. So, you know, it is an improvement there, which is good. And
bigger blocks and lower units too. So
bigger blocks, faster. And then also like the bridging, because the contracts are the same, like because there's that like cross-chain bridge potential, that actually allows kind of both to work together, because they're bonded by their liquidity. And so it's like the contracts on PulseChain are like an extension of Ethereum. So that, you know, that's another, you know, maybe that doubles the capacity, you know, effectively, or, you know, what, you don't know how it'll play out, but, you know, even PulseChain, you know, and, you know, at the end, if we want PulseChain to be the most popular, widely used rails for financial contracts, NFTs, you know, whatever wacky shit's going on that like the children born today are going to be doing on these blockchains, like that we can't predict. Like if we want all that activity to be on PulseChain, you know, paying high fees, burning those fees, pumping the PulseChain price, causing you know, like you should want really high fees. You just want your assets to outperform that increase, you know. And so that's what Maximus really helps people do, is it helps your assets outperform any potential gas price increase in the future, which could be dramatic. And it definitely, the larger it is, it's like the better it is for the whales, because it's like the gas prices are like a tax on the poor, because they're not based on the size of your transaction, they're based on the complexity, and it's like a per unit thing. So like in, you know, like 5,555 days from now, say yesterday there were 100 max length stakes, then there's going to be 100 individuals all having to pay that at least 1 ETH. You know, hopefully it's lower. You know, you can't predict what it's going to be, but like if current trend continues, or if just current how it is today is how it is then, it's going to cost, you know, that's 100 hexagons with 100 ETH. Who knows what the ETH is worth at the time, that could be buying hex with that ETH, that are now paying an Ethereum mine. Maybe then it's like a validator if they roll that out. And maybe that, you know, but they're paying not a hexagon. And so that's just like money that's like perpetually being sucked out of hex through the gas fees. And so by pooling that through Maximus, that is like a major value proposition, because like, especially for smaller stakers who like every day when I look at that MaxLink stake bot, it sends out like a daily report. When I look at that, I'm like I look at the median. I'm like, oh, everyone below this median line, dunzo. Like, because with the amount of ETH it's going to cost to end that stake, they could just buy HEX on the market and get more, and they're buying it from you, the one who could afford to end your stake. And so that's kind of how, like, what I see like a major value proposition, and why it's so important is because it enables more of our economic energy to stay in our markets, instead of leaching out into like the Ethereum USD market, to the Ethereum like validator. Like,
but so you're imagining this world, you're thinking very long term, which I think a lot of people have trouble even imagining what 15 years from now will look like. And a lot of people don't have the confidence that, what if this isn't even around that long? But I think because you come from a technical background, you're like, well, this is literally unstoppable code. Like, it's gonna be there. And so let's try to prepare for the future, 15 years in advance, which I know it's hard to fathom, guys, but that is pretty cool. I mean, when you put it like that, like gas savings are a tax on the poor, I mean, it will become a problem. So you're future-proofing HEX right now. But I want to bring us back to the question about liquidity. Maybe what he was asking was, will there be liquidity pools for Maxi Coin? And I guess that'll be up to the users. But if there is a high liquidity in the Maxi HEX pair, for example, then yeah, you will be able to exchange HEX for Maxi at any time on the open market. But exchanging is different than redeeming. I guess that's where I got a little tripped up by that. Can you say anything? I mean, I guess we can't expect anything, right? So about liquidity pairs, that'll just be up to the market.
Yeah. Anybody can, like, even though I have no extra incentive to provide a liquidity, pair there.
Right.
It would be a good service. But the thing is that Maxi HEX could be a really strong token to provide liquidity for, more so than it would be to provide when I say be a liquidity provider for, I mean like the double-sided, like Uniswap V2 style. So it is a better coin to provide liquidity for, because that redemption value, it almost
less than permanent loss risk, right?
Less than permanent loss, because it, even though it's growing relative to it, like price ranging about in any range, the market makers, it's like they earn more of one on the way up, they earn more of the other on the way down, and then when it comes to here, they now have more of both. And that plus the the fees, and like as new liquidity providers keep coming in and new buyers, and they're like growing that liquidity pool. So awesome. The impermanent loss, there still will be some, because one will grow out, but then liquidity providers can implement strategies where, in addition to being like a at all prices liquidity provider, they could have, in addition to that, they could be, selling premiums,
right,
buying
V3
deficits.
comes out when the business license wears off or whatever, and we can copy that.
So that type of activity could happen. So this would be a really attractive coin to provide liquidity for, because and that is where I was getting to after I veered off into the gas thing. The number one value proposition of Maximus is this ability to have liquidity, and so because of how it's designed, it enables active market making and encourages active market making, because it's you're earning more of both, which means you're earning more of HEX, and then you as a liquidity provider, you're earning more HEX at a rate that no one knows until it's out there. Right. You're earning more HEX because you're earning more Maxi, and then you're earning more HEX, and the Maxi is really just HEX. And so you're earning,
you can
HEX.
opt out too.
Yeah,
that's liquid. The instant liquidity. Yeah, that's what like he means by instant liquidity, guys. It's like, if you don't want to, or if something happens in your life where you no longer want to hold the remaining years on your stake, well, if you put it in the Maxi contract, you can sell it to someone who does want to hold and get all those gains and rewards by the end of it. Which that was really well put.
It makes there's like the illiquid yield through the normal staking. And then, that probably will that will probably be higher than the market making yield. But but then in addition to the illiquid yield source through regular staking, there's now a liquid yield source on HEX by being a market maker in the MAXI HEX pool. So that I think could be really attractive. And like for all the people, they're like probably maybe getting into like PLS USDC liquidity pools. Like if you expect pulsex to go up, you don't want to be earning like an incremental amount of yield, because at the end of the day, you're going to end up with a whole bunch of the thing that didn't go up. And everyone that only held the PLS is going to be happy. You're going to be sad boy. And so, choosing things to be a liquidity provider, definitely think like the number one question you should be asking yourself is there going to be high trading volume? And is there going to be, is price going to generally stay within a range, like a gradual range? And so
it'll be a function of how many people even know about this, right? So that's always going to rely on a little bit of marketing, right? But that also leads into this point, which I don't want to say this could negate the value of Maxi, but Hexer really wants to know, and I've wondered this too, why not just rinse and repeat this every month, or someone just makes a new version of this? Have you thought about that?
Yeah. So that was the original idea, was to do like a recurring stake. And the problem with it is just like in a trustless way that doesn't rely on like human interpretation to like determine the minting ratio, because like as you're, if you have one pool and then you have one stake, and then a couple weeks later, like how do you value the existing coins to know how many maxi to mint per hex? And so that was like just like the challenge where I decided to simplify where we're going for this one. And so we very well could launch that, and we have some awesome ideas for how to like potentially do that. But as of now, we're really just focused on this first one, because one, like the first one will always be the top performing one, and
just the brand recognition, being first to market and stuff.
Yeah. And because, it's earning at a lower share rate, for longer days before future pools can dilute it. And also it has, because it's ending earlier than the others, there may be some like front runner premium that people would want to pay for like the earlier version versus the other one. The bigger hedron bonus, so there's a lot, so like there's
the first version will objectively probably be the best, just in terms of the hedron bonus and the share rate.
But if and also certainly zero expectations of me doing anything, but things that I am interested in, like if I was to to do this, maybe one idea would be to kind of maybe convert it into like a general purpose pooling thing, and maybe that people could organize their own pools, and then in there and then in addition to that, make it so that all Maxi is like fully backwards compatible. So like you could join any new pool with your existing Maxi. They'd probably be separate tickers. And then also within the like the contracts issued through the Maximus, build out like a liquidity network, so that like, because even though like, so the code is not open source, it's not licensed for public use. It's publicly viewable for people to audit and confirm, but it does not have the MIT open license. Like this is not open source, much like HEX is not open source. Like if you try to actually copy the HEX code, there's a reason why no one has. And so, it's similar in that sense. But, because like that, and that's also a big part of why, like, at least on this first contract, there's no minting fee. Cause like, then you think, okay, someone could just copy it, remove the fee. So like, I just cut to the chase on this one where there's no like minting fee, because, if you're creating it yourself, you can afford to do that. Right. And so, so like,
nice.
it's more of like kind of, to compete, because that's, if it's publicly viewable and unstoppable code, then, someone could. And so the way you compete against, that is you just kind of change your perspective on, kind of how to operate it, so like,
so you're paying everyone's gas for us?
No. So we'll talk about the gas. Let me finish this about this, and we'll talk about how the gas works. But, so, again, no expectations. This all ideas. No plans, no even like serious effort has been made in any of these directions. But but like building up like competitive advantages. Mainly through like the backwards compatibility. Where you could. Where like old Maxi mintings can be, almost like you can like upgrade them into the new ones. Where like the new Maxi mintings now hold a basket of all the previous ones, and fresh HEX on its own. So like where they all can kind of just like roll up into each other, and then also provide, like building out like liquidity networks, maybe like with incentivized liquidity pools for like these pairs. And then really where like all the Maxis, potential future contracts, could kind of blend into one as like, kind of in like a big market. And, where there's like, and those could be very positive things to be liquidity providers for. One, because like the arbitrage across pairs. Two, because just like high trading volume. And so like kind of, that approach of like, ability for like there to be all types of issuances and then of these pools. And then if they issue through through the Maximus DAO contract, then they can plug into the liquidity network, because the liquidity is the main thing. Like, could mint a pool, but if no one is actively trading it, then it's, it's like, you're losing that main value proposition.
Yeah, absolutely.
Yeah. So but again, that's all just ideas. Those are all like, and that zero like negative expectation. You should expect me to sabotage this,
Yeah.
But the good thing is you don't have to trust me, because I have no control. So like,
right.
The opposite of expectations.
The only way anyone can sabotage the price of Maxi is by shooting themselves in the foot early on, basically like pledging a bunch of HEX, minting a bunch, and selling the price down against themselves. Like, I don't see. Well, granted, I should mention that just there is the new coin effect, which is just a social phenomenon where people just buy something because it's new. So, so you might realistically just see this pump and dump, almost like the Hedron initial pump and dump, and it stabilized back at initial prices. Hedron did, and Maxi might just have that initial, wild fluctuation for like a month, and then stabilize at some price more near the treasury value. You know what I mean? So we can't discount the fact that people just ape into things because they're new. But I agree that that's like a very short-term outlook. And then Giovanni here wants to know about, well, there's some talk in the chat about launch date. And I know your audit was a success. And he's feeling it'll take a few months. I think it'll be even sooner.
Right? Yeah, like within the next few days. The only so the audit, like the security part of the audit was successful. And then they also, so now they gave a couple recommendations on how to just improve the gas efficiency of the contract. And so I fixed all those things that they had recommended, and then I sent it back to them. So now they're, updating the audit report to say that like these 3 like gas inefficiencies or like unused libraries, those are now gone. So they're delivering the like updated audit. And then they also had recommended something that wasn't like a critical vulnerability or anything, but a different way to, like a slightly different way to calculate the redemption rate. So it didn't create any weird scenarios about like the redemption value on the last person. Like say all the Maxi was redeemed at the end, like the last person would have gotten like a little bit less than they would expect, just because the way the rounding worked. So we resolved like this rounding thing. And so they're reviewing that as we speak. And so the code that's in the GitHub is probably like that, if their review is done, then that's going to be the contract that gets issued. And so then from there, it's really just like we could go at any time. There's a handful of things that we're trying to fix on the Maxis Cash dashboard. But then, then it's really go time, and everything hard is built, and it's been tested. And,
it works. I've tried it out on the test net. It works today.
So if you're trying
to 30 to 15 in a couple places,
that and like so I saw someone in the chat was asking about why it was throwing an error, because we haven't hidden the minting page, because the minting phase is done. So if you try to mint, it's going to throw an error. So we actually left that up to like prove, like to show that like the contract doesn't allow future minting. So it's kind of confusing if you're trying to mint now thinking it's still going, but it's there just because we wanted to just see, because on different devices how it displays that it's done is different. And so that was how that So it is just about ready to go. And then, so hopefully within the next couple of days, because we're trying to lock in the hedging bonus.
Yeah, that's exciting. Yeah, the hedge room bonus is still at what, 4x or something?
I think it's like 6x now.
6?
And then
Wow.
it'll be, I think the target that I don't know. I haven't looked.
Yeah, it
In
seems
a
like it's
couple
been a
days.
while, but time moves slow in crypto and also really fast. Hey, crypto stylist. Yes, there's a Telegram group. Just check out maximus.cash, and there's the link is right there on the screen. All right. I think a lot of BK wants to know, how do the founders profit from this? Good on you for being skeptical. Clearly the founders don't profit any more than you or I. It just is a matter of, it's a function of how much HEX they're putting into the contract. So in order for Dipcatcher here to make any money, he has to put in his own money, his own HEX. There's no founder reward. There's no nothing. What was your motivation behind building this?
One, just philanthropy. Like you shouldn't only do community service when you get a parking ticket, right? Like, it's kind of like something that I think is just good in general. So like I like doing this. The creative aspect of it, like just making stuff is fun. So that's how I profit. Just like the satisfaction of creating it, and also like all the people thanking me for this and talking about how great it is, and like that alone is my gain. So I've already gained everything. And then from there, because I care about the success of like the HEX ecosystem, building things to enhance that, like taking that effort and doing that, like maybe the value that like results from the total HEX economy is like greater than like the incremental amount of money that I could have just like made by like, using that effort to like, work on something else and then take that money and buy a little bit more HEX. Like, so like to me, this is like a big like value amplifier, not just for me, but for all of us. And so, more for that. And then, also, just to, kind of, like what I really care about in advancing HEX is really building out the financial utility of HEX, like making it so that we can expand upon having such a strong underlying asset, and then, building that out into, other financial services and other financial products that, can kind of act like a black hole on the HEX supply, and then like allow
Right.
us to attract new audiences who like, maybe they're not like looking for like a DeFi coin to like buy and stake, but like maybe they want to own some insurance contract that's backed by some, yield paying, underlying, like thing to secure it. And so maybe you can kind of repackage like this concept of a HEX stake into other financial contracts that can attract, non-crypto
Dude.
audiences. So there's a lot. Like I think that taking this step is how we get there.
Yeah, that's incredible, man. Everyone loves that. It's like that meme. Everybody loved that. Yeah. Great. Probably the best answer you could have asked for. This guy, he's got everyone's best interest in mind, guys. So no need to be skeptical. I mean, obviously you should always be skeptical, but I mean, I could vouch for this project, and I think it's going to be great. What was I going to ask? I had something.
Yeah, about
in
who pays
back
the
burner.
gas.
It wasn't who pays the gas so much as like, one side effect that I think this is actually happening. It's a social side effect, or more of a behavioral psychological effect, is that you're forcing people to reframe the way they think about HEX on a 15-year time scale. I think a lot of I would call them latecomers or newbies into HEX. They are new, and they still have the conditioning from other cryptocurrencies that were never meant to be held past a couple of months, at most. And so what basically Maxi is doing is, if you get involved with this contract, you're forced into the framework of having to think about how much your HEX could be worth in 15 years time. And I think the concept that it's hard for people, right? Because crypto hasn't even existed for 15 years. But when you're talking about building the financial future and revolutionizing the entire, financial structure that is today, it has to be on a decades long time scale. And these are the things that are going to make it last. And it also just gives people, some kind of hope for the future as well. So they're not just looking to like dump it, or, it also gives you the ability to dump your Maxi if you're 5 years in and you get bored, or if you have some crazy thing happen.
And there's no shame in selling, like,
No,
there's
yeah,
really
we're
no,
not sell
because
shaming.
no, yeah, it's like there's, it's just leaving meat on the bone for the next guy. Like, why was there like a lot of things with how HEX launched were purely designed to just like not just allow the first guy in to get all the profit, you know. And it's kind of like that, where like, you know, giving your onboards a discount, like, you know, they should be thanking you. And so like, you know, that's why, you know, that like, you know, we don't try to like, because some people I haven't really heard much of like this type of opposition to this like pooled staking before, is that they're like, oh, you're going to like take demand away from HEX. But it kind of works both ways, because one, it's like, if you want that next cohort of like new hexagons to have like an awesome experience, like you don't want them to be buying the top, you want them to be buying a dip. And so like things that like provide that buying opportunity, or maybe like throttle buying pressure, you know, from one market and kind of move it to another one, that is opportunity for that new group to step in and buy that dip. And then from there, it's like, you know, they're going to have just like a higher ROI multiple that they can go show to their friends and family and all the people around them. Like, look at this awesome time I'm having with this thing. And then they go down the HEX rabbit hole. So like, you know, giving your bro a good deal, like that's a good thing, you know. And that's kind of, you know,
I would
and
love
so
for
like
this to be
we definitely
first
celebrate that discount. But because there's so much, like, you know, I mean, a lot of the discussion in the chat, it's like, because, you know, it has the, you know, also just like the type of, a lot of people are, it's like, oh, I'm going to hold Maxi just like for the gas saving benefit. Like, this is my staked HEX now. So like maybe they're not selling. And then also, you know, because there's the baked in HEX from future earnings, and there's the baked in hedgerin, and there's like the baked in potential future hedgerin price appreciation, then like, you know, maybe the discount, like, you know, it's hard to determine what that benchmark is for like, what is a discount? You know, is it the value of the principal? Is it the value of the principal plus earned interest? Is it the value of the principal, earned interest, and the implied future one, which is more like a range? Like, how do you actually set the baseline? And, you know, it has so many things kind of working for it that maybe the discount isn't actually a discount, but it's like a relative discount, where like maybe price is close to the, you know, the redemption value, you know, because maybe it doesn't ever go under, because it's like no fee, no, you know, major gas savings for everyone. So there's not going to be like a baked in like amount that they're going to cut. So like, who knows, maybe how we frame like what is a discount kind of changes over time. But that'll be interesting to see play out.
Wow. So there is just the implied, the ability, the instant liquidity essentially adds so much of a premium that it never goes below the USD value of the simple calculation, HEX plus interest plus hedron.
Yeah, because there could be people that are totally fine with like a dollar cost average Maxi strategy, where really what that is like, it's like you held staked HEX the whole time, but you were always liquid, and you're getting, it's like you're going, it's like sometimes as a joke, I say that Maximus is like a T-share time machine, because when you're buying Maxi in 10 years from now, it's like you're buying a portion of an old stake. And so you have this like you have like a very low T-share rate. And so based on the price chart of Maxi and the T-share price, in a way you could in effect be getting, it's like you're going back in time to lock in those T-shares. So that's awesome. It can kind of work in that like the price you pay for it, it can, you know, it can kind of have that effect where it's like you just went back in time and had been staking the whole time.
I would love to fast forward and just see someone that employed that strategy and basically DCA'd into only Maxi discounts, and essentially see if they beat the single stake, or they probably would, right? I mean, theoretically, because their bonuses are maxed the fuck out, and they get this 4x hedron that people are, or whatever, you know, they get this hedron multiple, and let's hope that has some staying power for hedron. I think it will. I just think it's, you know, it's not surprising to me that people aren't trading stakes as NFTs that only have a couple days completion. But I think, you know, this is all going to come together in a couple of years time.
And also, you know, and you know, because that similar like a one where you had to trade the whole stake, that was also like one of the early ideas. But the reason why we chose to make like one big stake and then like add fungibility to the stake as opposed to reduce fungibility in the stake was that, like, to sell those, you have to find the right buyer at the right price at the right time for the whole stake. Because, you know, unless you do like some fractionalization of it, then, you know, you can't just like break off a piece of it. But with Maxi, like if you're holding Maxi, like as if it's just like, you know, you're staking, and so you're just like staking with Maxi, then, you know, you can break off a part of that and sell that and not have to sell your whole thing. And like when you have to, when people emergency end stake, you can't just emergency end stake a small part of it. It's like all or nothing. And so there's, there's more, you just don't have to, if you need cash, but just a little bit, say you need $200 and you have like a $20,000 stake sitting there. You don't have to nuke your stake to get that $200. Right. You can just break off a small portion of it. Hopefully you're selling into a premium, and then, you could do it that way too. So,
and you can buy it back later, and there's no interest payment unlike, Hedron. Like you don't have to take out a loan against yourself. You're just sharding off a piece of your liquidity.
Yep. Wow, we have a lot of comments. Holy shit.
Yeah, I'm really far behind.
I forgot how big your channel is. I have like a small cohort of people. You
came a long way, man. It's come a long way. Can you imagine when PulseChain goes live? Man, we're gonna be.
Yeah, I feel like so much is going on in our world. Like everyone else everyone else I know that's into crypto, but like not into like our world, they're having a horrible time. They're out there like trying to get hyped up by the Bitcoin conference and shit like that. I'm like, no.
that's pretty cringe. But I mean, to be fair, there are some people in HEX that are having a horrible time, and I don't mean to like, I don't want to ignore that, because if you did buy the 50 cent to 40 cent range, like you're probably not so happy right now. But
think about how unhappy the people that FOMO day one and then watched the 95% price dip. Like in that, you're right. And so like they're, at a much higher risk time, like, now like there's so much less risk, everyone that did that, they were like, oh shit, down 95%. Yeah. Maybe those people were right. Like there is, like a lot
it'll really test your faith, man. It really will. But I mean,
a lot of pain there, but you need that pain, you need more pain. Like, more pain is good. And because you'll be better for it.
It'll shift your whole mentality. And when you look at things like this, like looking at what you're doing and what Alex did with Hedron, and people are really, really building the financial infrastructure that we need. And this just gives me more confidence to have that faith, where it shifts from not needing faith, but seeing it with your own eyes, right? Like it's okay to doubt, the validity of these things. Like, yeah, right. Is it Bitcoin's only existed for 12 years? How can you even imagine HEX being around for 15? And it's like, well, look at what's actually being built in front of you. I mean, these are real decentralized systems that have not been, they're socially enforced networks that have not been taken down by any government or jurisdiction yet. And again, like I said earlier, this just adds more speculative stickiness I tend to think from a social like aspect and point, but you're making a really lot of good technical points as well of like, what this actually is instant liquidity, maximize your rewards, and obviously save on those future gas huge problems, which are going to happen, but we just don't see them yet. All right, we're at an hour. I mean, if we have any really good questions left,
let's see.
BK, you want to answer this one?
Yeah, so that transaction fee percentage. So so on Uniswap, whatever that default is probably what it'll be on that V2 pair, and then on pulsex there, same thing there. So that would be a really awesome thing for the Maximus community to do, is figure out how to put forth a proposal and successfully defend it to get the MAXI HEX pair on pulsex to be one of the incentivized pairs. Because that pair really benefits the HEX economy, and it provides a way for people to earn yield on HEX in a situation where everyone's happy, and and you're earning more HEX because of it. Unlike because like you could earn yield by like lending, but like usually in the lending, if the lender's making money, it's coming at the expense of the borrower, and so like that's kind of more one-sided. But like market making in a MAXI HEX pair, it's like a very like fair and kind of like non-extractive way to like earn yield. So I think the MAXI HEX pair on pulsex would be a very good pair to have there, and it's kind of like homegrown, and so I think it fits right in. So that's what I would really like for us to do.
Yeah, I will be definitely campaigning for And this is going to actually have to happen in reality on the PulseX platform. When we want to incentivize different liquidity pairs, we're going to have to go into the world and actually campaign for votes. And so MAXI HEX is one of the pairs I would love to see, along with Hedron HEX and anything that helps, boosts HEX in the long run. But yeah, I'd love to see a highly liquid MAXI HEX pair, because then again, it'll just be fun looking at the ratio. What if the ratio is 2-to-1 MAXI to HEX? That means that people are valuing the implied future rewards of everything that a MAXI will redeem for at a 2-to-1 ratio of what HEX is instantly liquid for right now. What's up, Whales Only?
I see someone asked, they said, is there a fee to mint MAXI to pay end state gas fee? So there's no fee to anybody, and nobody is personally responsible for paying that end state gas fee. So like for most users, you mint MAXI and then you redeem it for HEX at the end. You pay no start state gas fee and you pay no end state gas fee. So that start stake and end stake function, those are public functions. Anybody can run them, and the person who runs them on behalf of the contract, that person pays the gas. And so, to start the stake, that'll cost like nothing. So, it'll probably get done right away. But the end stake, because it's a voluntary thing where there's nothing in the contract that like guarantees reimbursement. There's no extra fee that they get. They don't, nothing. They get what they get. They get nothing. It's like they did it on behalf of the, it's fully voluntary effort. And so the way to, one, just like there's going to be people in 15 years that maybe on their own have stakes that are similarly large. And so like maybe like the biggest MAXI holder just wants to be a hero and, gain clout. And then they click that end stake button and pay for it as like a flex that you can afford to pay this massive gas fee for everyone else. Like, that's one way that it could happen. But what people have been starting to talk about and what I've started to tinker with is just building a separate contract that trustlessly pools to incentivize the end taker, where that contract reads from the MAXI contract and says who paid for the gas fee and allows that address to be the one that redeems whatever is pooled into that trustless like gas pool. So like there's some external ways that we can like incentivize that gas creation, but those would be fully opt-in and voluntary, so like the payment of the gas, it's fully opt-in on anyone's basis, and you shouldn't expect anyone will end it. Maybe someone incentivized to do it will, but you should, if you want them to end it, you should incentivize them to end it.
And if we're talking about like $50,000 ETH, and let's just for fun say $100 pulse, like the gas fees will be significant. But that said, how much are they going to inflate the US dollar by that time as well? And will we have entered a crypto to, peer-to-peer digital cash system? Like,
and the HEX, I meant to say that earlier when I was talking about the gas prices. HEX going another 100,000x, millionx, that solves all gas prices. You want your assets to outperform your costs, and in this case, the cost is the gas. And so so long as HEX continues to outperform the growth of gas prices, then that solves it all. And so maybe it won't be hard to incentivize someone to end it. But so we're not we as because there's no like official team, even though I'm creating it and like Gold Key is designing the website and like organizing the Telegram chat and creating all the content, and it's like there anybody can put forth ideas for how to end this thing. Truly, like I view every person that mints MAXI as part of the founding team. Like you're all part of it. Even though I may be writing the Solidity, it's not like I have control over it. And people's ideas, like a lot of how we did the Hedron integration was based on how people that came in the chat and they gave their input, and then we're able to update it, and just seeing getting feedback. So like really like and everyone who just like showed support, or anyone who was there to ask the right question at the right time that like unlocked like a key insight like that. Like everyone, I view them as like helping contribute to the creation. And so, I view like, if you're a MAXI minter, then, you're a founder in this. And so
I love how it's called MAXI too. Like, did you pick that on purpose?
So, so it wasn't why, like, so honestly, in thinking of the DAO, like Olympus DAO was so popular, I swear, because of the name. So like just that like Olympus DAO, like kind of
Yeah.
sounding
It
like
rolls off the tongue.
formal and like elegant and royal.
Yeah.
And
It
so
sounds
like,
powerful and important, you know, Olympus
yeah,
DAO.
yeah. And then like
Maximus
so,
sounds pretty badass too.
yeah. So then honestly, Maximus to me came as the name before I even was thinking of this. Like just that is a name for like a crypto thing. So that actually came first, but then it just worked because for one, like, you know, you're maximizing your yield, you know,
Yeah.
and then two, Maxi is the token name. Like one, just like commandeering a name that's usually thrown as an insult and just like commandeering that, like flipping on its head, like this our thing. Like,
Yeah.
you know, like just like taking the bad and then, you know, countering it with good. I think that's
Owning
that's
it.
fun.
Yeah.
And then
Reality inversion. Like, yeah, I am a maxi. What now,
coins
bitch?
with an X in the name. I think Command a Premium, Hex, AVAX, you know, you name it. Like there's, you know, I think coins that have that, I think like people like the X. So that's part of it. You know, there's not really, I mean, I bet if you look on any of the coin ranking sites, you might see a Maxi coin, but you know, honestly, like that ticker symbol doesn't even really matter. Like you can, there's not like, there could be numerous ones of the same ticker, you know, the contract address is what matters. And so like, you know, luckily there's not like a highly competitive coin called Maxi already.
Yeah.
So
true.
You know, but yeah, I really like the name. And also like, I love how it like fits in with the
Gold Q saying he came up with it.
Dude, no way. We'll have to revisit history. But also how it fits in with the movie.
Oh yeah,
Gladiator, like that scene where they're chanting Maximus, Maximus, like that's awesome, and just kind of that whole, you know,
I forgot that scene, but I was wondering why you put Gladiator on like the homepage. You know what I mean? That makes sense. It makes sense, and there are names that suck too. I mean, there are good and bad names. I mean, you've got like ass coin and like pussy coin, and that's just like embarrassing. You know, nobody wants. That's not going to be the future of money. You know, so it's funny. All right, guys, we're at 1 hour 15 minutes. We have a 9,000 IQ big brain on screen right now. So if you guys want to ask him any last questions, now's your chance. Otherwise, we're going to hop off because I don't want to bore you to death. But this is pretty awesome, dude. This is really, I think, a game-changing. I like Hedron. I like Maxi a lot as well. But this is almost like easier for people to understand too. So everybody check out maximus.cash. And there's a Telegram group if you want to get involved. Again, totally optional. You do not have to put your HEX into this contract. But I mean, it could be a fun experiment, at least for me, you know, to be a part of this whole founding, you know, launch phase.
Yeah, thank you so much for having me, and thanks everyone for joining us. And yeah,
I'll make another video when we launch when you launch the launch phase, and I'll just explain how to do it.
Perfect.
And let's get to that 150 million.
Yeah, let's do it. Let's 150 billion maybe.
Oof, you're wild.
All right. So if you follow on Twitter, or Telegram, t.me/Maximus DAO, Twitter, Maximus_DAO. Find me on YouTube at Dipcatcher. Find Goldkey, GOLDK3Y on Twitter. Find him on YouTube as well. Lots of good information there. Maximus.cash. We're about to roll out an update to this with the updated information. And then, we're if you want to stay tuned right now, we have a live test phase going where the minting phase ended the other day. We're in like the second day of a 3-day test stake. So if you want to follow along with that, check out the Telegram. And yeah, thank you so much for having me on.
Love it. Like, subscribe. See you guys on the next one.